Crypto Rocket. Today we will be discussing Clock x24, which is a brand new protocol that just launched today. So I'm going to be walking through how it works, what it is, with potentially letting you know whether I'm planning on investing or not and why, and whether I think it's a good time to currently invest in this protocol. So first things first, I am not a financial advisor. None of this is financial advice. It's simply for educational and entertainment purposes. And if you'd like to hear more of these videos and see more of these different projects that are coming out pretty much every single day now, feel free to subscribe to my channel. Okay, so let's get started. Clock x24. Like I mentioned, it is a brand new protocol. It literally launched today, just a few hours ago. So this is the chart where you can see, from the launch was a big dip where probably the pre-sale investors were selling off. It went back up again, and now it's at that for BNB levels. So yeah, it's looking interesting. I want to see how this chart develops. I'm usually don't like to go into these projects in the first day unless I get in really early and I get in on the pre-sale. But if I don't get on the pre-sale, I tend to wait a day or two to see what happens, because there is a very good possibility that this will just keep dropping. We've seen this happen with some of the latest protocols, such as New Order Finance, for example, which is a very similar kind of protocol, and it just crashed within the first couple of days. So I'm gonna give it a little bit longer and see whether it ends up like New Order Finance or like the OTO protocol, for example, which was doing really well. So this is currently how the chart looks like. Okay, but let's get back to the website and talk a little bit about what this is, how it works, and why it's so interesting. So this works in a very similar way to, you might have heard of Titano or Libero Finance. It's got that similar fixed APY, which you get, every 10 minutes, you get a certain percentage on the amount of tokens that you hold. And it's got an auto staking up to essentially 1,200,000% APY, which essentially means that if you were to invest $100, you would end up with over $1 million in a year's time if the project proves to be sustainable and if the value of the token doesn't drop. So that's essentially the first thing that you need to know about this protocol. You can buy the token on PancakeSwap. So this is on the Binance network. So you would need a MetaMask wallet on the Binance network to buy these tokens, or a similar wallet to buy and store these tokens. Now, the good thing about all of these protocols is that you don't need to stake anything, or there's really no work to be done. The moment you buy the token, it auto stakes, auto compounds, does everything automatically, and you do not need to worry about it. Whereas, for example, with Wonderland, you would need to go in and actually stake and wrap your token and so on. Here, you don't need to worry about that. You just buy the token. So a little bit about it. So as I mentioned, forever staking APY. So essentially this is a fixed APY. It's not going to change as long as the project is able to sustain it. It rewards holders with automatic compounding interest, increasing their clock times 24 holdings over time. How much can I earn? So I talked about this a little bit, but essentially if you have $1,000 invested in it, you can earn up to $1 million at this certain APY. Now the reason why this is 1,100,000 and not 1,200,000 is because of some fees. So there are some buying and selling fees, which I think they calculate into this number. So how it works, C24 is the native token which interest rebates rewards are paid. Every token holder automatically receives 0.018% every 10 minutes just for holding the token in the wallet. It's does have one of the highest auto staking fixed APYs that I've seen. So, Titano Finance is, around 100,000. Libero Finance is at 150,000. Some of the, for example, Safu is more, at 300,000 and so on. But, we've recently seen some of the protocols like Yieldzilla, for example, launch at 900,000. But there are very few that launch at over 1,000,000% APY. So it'd be really, really interesting to see what actually happens with this really, really high APY. One thing to consider is that the latest protocol that I've seen, which had a fixed APY of over 1,000,000, was New Order of Finance, which is pretty much over now within a week. So the creator has already said that they're most likely going to end the protocol in the next few days, which shows that perhaps these really, really high APYs of 1,000,000% not really sustainable. So that's one thing to consider when, before buying into this protocol. There is this C24 insurance fund, which serves as an insurance fund to achieve price stability and long-term sustainability by maintaining a consistent 0.01% rebase. Keep holders safe by, there's 5% of all trading fees are stored in the 24 insurance fund, which helps sustain and back the staking rewards provided by the positive rebase. So this will avoid flash crash through price stability, achieving long-term sustainability, and greatly reducing downside risk. And there's also the treasury and the fire pit, which also works very, very similarly to all of these protocols. So you've got your treasury, which provides support to the XIF in the event of an extreme price drop. The treasury also funds investments and C24 projects and marketing for C24. And there is the fire pit, which essentially burns a certain percentage of the traded tokens in the fire pit. So essentially, the more people trade, the more of the token is burned and will create reduce the circulating supply. And because of that, it should keep the price of the token more stable. The tokenomics, so I'm not going to go through too much of this over here, but you can take a look. I also want to look at the white paper. Sorry, not the white paper. Just look at the documentation over here, because there's a couple of things. I'm not going to go through all of this. You can take a look at all of these different things. But there is one thing that sets this apart from some of the other protocols, which is the buy and sell fees. So normally the buy and sell fees are a lot higher than what they are over here. Here, the buy and sell fees, buying is 6%, selling is 8%, which essentially means that, if you buy $100 worth of this token, you will only get $94 worth of the token. There will be a 6% buy tax. And similarly, if you have $100 of the token and you sell it, you will only get $92 because there will be an 8% sell tax. So this is done to basically, first of all, sustain the protocol over time. And second of all, because, this goes to the treasury, which makes it more sustainable, but also it's to discourage people from, swing trading and, constantly buying if the price goes, selling if the price goes up and, buying during the dips, but simply holding it over time. So it should be a good thing for this long-term sustainability of the protocol. So actually, if you are looking for a token to buy and hold for a long period of time, you'd probably want this to be quite high because it will discourage huge price fluctuations. Now, what I've noticed is that this is really low. Normally, the buy tax is, at least 10, if not 15%, and the sell tax can be as much as 25 or 30%, and here it's at 8%. Now, this is really low, and to be perfectly honest, to me, this is a little bit worrying. So between the fact that this is a really high API with, over 1,000,000% APY, on top of that, you have a very low buy and sell tax. And because there were very, very similar protocols, such as New Order of Finance with a really high APY, which seemed to not be doing great, Personally, I don't think I'm going to invest in this one, or at least I'm going to wait for at least 2 or 3 days to see what happens with the chart to make sure that there isn't a huge drop off in the first few days. So I'm going to give it a couple of days, see, what the reaction is, and based on that, see, whether this is something that I might or might want to, invest in the future. These are just some things to keep in mind, but of course, do your own research on this. The good thing is, when you look at their Twitter, they do have a lot of followers. They do have a lot of engagement on their posts, which, is possibly a good thing as well in terms of, they seem to have had a pretty successful launch. So overall, the protocol, it's not that it looks bad. I just think that personally, I don't think it's particularly sustainable. And because of that, I think the price could drop significantly in the next few days. So I'm just going to wait, until the end of this week, see what happens. And then if I'm going to go into this project, it's going to be because of the high APY. So I want to make sure that the price is going to be relatively stable and that it's not going to, drop 99% over the next few days, which it could. So I hope you guys enjoyed this video and that it was useful for you guys. If you did, feel free to smash that subscribe button and the like button if you would like to see more of these kinds of videos showing you these high risk, high reward projects.